Well, if you thought 2025 was interesting, hold on to your hat. 2026 is already shaping up to be very interesting. We're back now with our guest co-host, Jeff Hull, Senior Financial Advisor at Manulife Wealth. And Jeff, already it's been interesting. I don't know if we had Venezuela on the bingo card for 2026, but you're looking at some of the mega trends for 2026. And what are some of the ones that are going to shape this next year?
Well, probably the biggest influencer will be Donald Trump. Big surprise, same as last year. Again, not just his politics, which can be very acidic, but you got to watch his policies. And you got to remember, too, the most important thing for Trump, and we can rely on, is his ego. He wants to go down as one of the best presidents of all time. So he needs to win the midterm elections coming up in November for the House of Representatives. Republicans currently, as you know, control the White House, the Senate, and the House.
But it's been
the
a
House
lot of pressure right now.
Exactly. So the House could flip Democrat, which historically that's usually what happens in the midterms. It flips. But if Trump wants to keep the House with the Republicans, he's going to have people feeling a lot better about inflation, the stock market, business, lower taxes, but also with some extra walking around money in their genes so they could feel a little wealthier, so they would want to vote back in a lot of the Republicans. Otherwise, Trump's going to spend the last 2 years of his presidency impeach, all the way along the way, and the Democrats will likely zip up the purse strings that they have control over the U.S. government for.
So what do you see him doing with policy-wise, and what kind of an impact you see that having on, well, everywhere else, essentially, but Canada especially?
Yeah, I think actually even just going back to traditional politics, and he proved this, and even on BNN, I talked about this when he first got elected, is for the first 6 to 9 months of his presidency, he was trying to enact 6 years worth of change. He was going to break and bruise relationships, even when he did the 74 tariffs around the world. It's like a hockey guy dropping the mitts on the ice to fight the whole other bench at the same time. It's like, is he in that much of a rush?
He's a big guy.
Exactly. But he had to be, because he had to get that out of the way. All the bitter medicine, this is what all politicians do. Dole out the bitter medicine early in your election and when you win. And as you get and draw closer to the next election, start to be the good guy. Start to hand out candy to everyone. Not be so bad. Again, more walking around money in someone's jeans makes people feel a lot better about re-electing that government as an example.
All right, AI.
Love AI. Can't get enough of it.
So you're bullish on it, I'm going to guess.
Yeah.
It does seem like this will be the year that we might see a lot of fruition when it comes to AI. Companies really taking advantage.
Yeah, I think it's going to be exponentially accelerated. I've been an early investor in NVIDIA for over a dozen years. I love NVIDIA as a company, but also the whole AI framework and space is tremendous. There's going to be a lot of efficiencies that are created for companies, industry, governments, but there's going to be a lot of dislocation and displacement for a lot of employees that may have their jobs terminated by this new AI technology. So that's one of the negatives of AI. But overall, for science, medicine, health, physics, space, all the way around, AI is only a good thing that way.
Yeah, I mean, traditionally when there's been disruption and there is always a fear that jobs are going to be lost and never replaced. Usually more jobs are created than were destroyed. But for AI, a lot of people think this isn't the case because we may destroy a whole lot of jobs.
Well, we can always oil robots, right? So that's
a job for you.
But the
code, right?
Yeah, exactly. But the reality, actually, even AI can now do the coding, which is you just need a human for the initial inspiration. But you have to remember, there were no such thing as an auto mechanic before automobiles. There was no such thing as certain types of engineers until that was needed for certain things, certain technologies, as an example. So throughout history, whenever there's been a dislocation, disruption, innovation has come in. I always say the Stone Age didn't end because they ran out of stones. It's because there's new innovation and new technology that comes in. So I think AI is a great one. But another one actually aligned with that is the robot revolution coming in. And not just the robots we know of that do assembly lines, the Canadarm on the space.
The ones that dance and things like that.
Oh, it's creepy how they dance better than I do. And I don't dance very well, but it's tremendous. But the humanoid ones are really taking hold. They're not just Teslas, but you got General Dynamics and all these other ones, and also for military. You know, even this military situation in Venezuela, this mission that went on that was flawless. Imagine if a lot of it could be done by humanoid type of robots. We don't have to have that. A lot of the F-35 fighter jets used actually drones, AI drones beside them.
Yeah, they sync up with it, right? And they fly as
almost like a trio, but there's only one pilot. So it's amazing technology, what AI can do, robotics can do, and even autonomous cars for the future as well.
Okay, so it's all glorious, but there are also some things to watch for.
Yeah, there's some negative things out there as well. I think one of the biggest problems investors have, number one, is their own emotion bouncing between fear and greed and fear and greed. People have to have a plan and work the plan. People don't plan to fail. They just fail to plan. So they have to kind of figure out and have a kind of a torture-proof or storm-proof portfolio. I always say predicting storms doesn't matter, but building portfolios like ARCs is. You don't have to predict the storms, you got to endure the storms. So people need to be ready and know what they actually own. But one of the biggest dangers I see, and I do a lot of work with the NHL, and I find that when I take on a new client, a lot of them may have private equity or private credit, which are these kind of funds that lock you in almost like a prison for 10 to even as long as 15 years. And
I'm sure they seem like a good idea at the time.
Yeah, because they'll point to something inside the portfolio, go, look, SpaceX. And people go, oh, I want SpaceX. But don't say, oh, the rest of it's all turds inside that portfolio. So it's difficult for investors. But the biggest problem I see now is starting to be reminiscent of the 2008 Great Recession, is around gold, silver, and certain commodities, where all these private equity and private credit funds out there own paper promises that somewhere down the line you own gold bullion or silver bullion. So I think investors have to be cautious and know what they own. And if they are going to go down that route of commodities or buying gold or silver, if you're not going to own the actual direct metal where you can actually hold it, then buy a fund or something where you know that it's audited and they actually control 100% in the vault of what they claim to have. Because there's this whole parade of these paper promises. Many can't back the amount of gold and silver. There's too much paper out in the world for the amount of gold and silver that's ever been mined. So that's a danger point people need to watch out for.
Okay.